Little company no one's ever heard about reporting after the bell yesterday. Something called Nvda. I don't know. We usually don't report on microcap stocks this early in the thing. We might cover its earnings. Some economic data out. Markets trying to find their footing. We're gonna break it all down. Matt, I'm excited for today's show. You are my earnings expert. You are Tackle Trading's earnings expert, and what some people
Which
call the
means
most
I
important.
get the numbers. I like it.
Well, no, it's just not the numbers, bro. Don't sell yourself short. It's the analysis behind
Good.
those numbers.
It's the interpretation of numbers, which is the most important. Yes, it is.
And that is, you made some good calls. Amazon earnings a few quarters ago, Meta's this most recent, right? And saying, hey, listen, market response is wrong. And usually when you say market response is wrong, guess what? Price tends to, in the coming weeks, match your analysis far more than it did the initial analysis. And so I know our community is really excited to hear your take on NVIDIA earnings as the market kind of a little spinning doji here at the high base. I want your technical take on that specific candle. And I don't even care how you're doing because the most important stock on the planet reported. So we're going to get to that. But how
Well,
are
I
you doing?
I am doing good. I am excited to be here with the crew to break down all the market activity here today. And it just so happens that all the market activity kind of resides in one name here today. And that one name is now Nvidia specifically. They now have a $2.6 trillion market cap after the 10% upward movement in price following a extremely impressive earnings report. I've said
So not just impressive, but extremely impressive.
I've said many times it's the number one most important earnings report to the market. I maintain that. I thought it going in. I still think it coming out, and so it certainly justifies the massive conversation Nvidia has sparked in the markets here today. Legitimately, nobody's talking about almost anything else other than Nvidia here today. I want to start with the broad market as we're talking a little bit about Nvidia because we got the high base that we were expecting coming into Nvidia's report, and quite frankly, we got the initial price surge following Nvidia's report that would equate to a breakout, but it did hesitate a little bit. And when you're looking at the heat map, it is truly a fascinating heat map here today.
Yeah, it really is.
It was a little bit more interesting earlier today when legitimately everything in the market was red except one big green bar called Nvidia. And I'm not kidding.
No,
Everything not named Synopsys, Elf, and Nvidia were down, and everything and excuse me, those were up, and everything else was red. But that was also based on what I would describe in terms of understanding the market response here today is some algorithm programming that happened following some minor economic reports that basically just hesitated a lot in the marketplace. I don't think that stays that way. I think it gets cleaned up fairly quickly. But the broad market is still in that high base. It's still not doing anything wrong. And I'll make this one point on the marketplace here today. Nvidia is a knockout. If there's one thing that Nvidia tells me today, it's that my analysis of this being a decade-long story, and not just in Nvidia, but in AI in general. And I've given a few AI presentations recently, one last week. I also did one with the coaches shows a couple months ago. This is a conversation that our community and the general public at large needs to embrace, because it's not just a one leg conversation. This is not just a one pattern, one trade conversation. If Nvidia proved out anything today, it is that this is a decade-long story that is being played out. That's going to have ebb and flows in it. You're going to have upward movements in price and downward movements in price, and we're going to be laser focused on it. But that Nvidia story is not slowing down, and they are the leader of that AI conversation. They're the leader of the semiconductor conversation. They're the catalyst stock, and they're going to have an impact downstream here as well. And so in the marketplace specifically, I wouldn't give too much concern to the doji here today. We have seen evidence that a retest of an all-time high following a pullback analysis does take a little bit of time to get dialed in, but the typical route here is a breakout and continuation type analysis.
Yeah, and I want to talk about that 1 second. That is something you have emphasized in your communication with our community over the last week. Is like, listen, you break out, you look back at history, it's usually not just an explosion up after the breakout. It's like the breakout has to earn it, right? You got to like, all right, we're breaking out. Is this real? Right? These breakouts to all-time highs. Will you just talk to it? Because I thought that was an excellent point of emphasis, and it sure is playing out that way.
Well, I wrote about this in last week's newsletter at Tackle Trading. And by the way, there was a interesting article released yesterday. It was basically a survey of the American consumer, and this was amazing to me. 55% of the American consumer believes we are in a recession right now. GDP has been expanding for 6 consecutive quarters. 6 consecutive quarters. 50% of the United States population believes that the market is down on the year. It's up 12% on the year, and it's going through a really good year so far. And so if you want to be more informed about what is everything transpiring in the market, definitely check out the Tackle Trade newsletter, because it is chock full of good information for you to parse. And I wrote about the retest against a pullback analysis, and talked about the historical instances in the last 10 years that we have seen these degrees of patterns. And I obviously put charts to them and talked about the technical formations that occur. And the typical route here is a little bit of consolidation. That is the typical route. And so it's not too unheard of in an overextended condition against the marketplace, against a retest against the all-time high, to see a little bit of consolidation before you see that next leg. And the average time in consolidation against an all-time high, it varies, because sometimes you get a momentum up and then a retrace back down. But in general, it takes about a month for it to get really dialed in. Now, I don't anticipate that happening here, but it doesn't surprise me that we are seeing a little bit of consolidation, because that is what the patterns do suggest. But I would, in general, suggest let's get ready for breakout analysis in general, because that is the outcome of whatever the consolidation typically is. Whether it's a week and a half in a high base and just allow the 9 EMA to catch up, or whether you're talking about something a little bit prolonged in a short-term consolidation, some degree of short-term neutral pattern where you then get into a breakout, the end result is typically a breakout and another leg here. That is the end result. And so whether it's a week, whether it's a day, whether it's a month, we're going to track that. There's no doubt about that. Now, regarding Nvda here today, Nvda, again, they did it again, and they've done it for 6 consecutive quarters. So let's not be surprised when they did it again. But this is an amazing earnings report out of Nvda.
I now have Britney Spears, "Oops, I did it again" in my head. I'm just going to apply it to the video.
I did it again.
Oops, I did it again. Just totally smashed everything.
Yes, they did it again. They smashed everything. Best earnings report of the season by a mile collectively when you look at everything in the report. EPS came in at 612. Expectation was 555, 565. That EPS beat was built into the conversation. There was at no point was there ever a concern that Nvda was not going to beat on the raw numbers. The beat on EPS is an impressive beat, but that was kind of built into the pie here. What was not on the raw numbers was the revenue conversation. And I don't know how many people are talking about this revenue side of the equation, but this one stands out to me on the revenue side. The market has had a revenue issue all quarter long. I don't care what the name is. It was 80% of companies I've reported on this quarter have been, and I'm just throwing that off the top of my head, but have had some degree of revenue issue along the way, whether that was revenue year over year or a miss on revenue. The 5-year average is about 69% beat on revenue. This quarter, we came in right around 60% beat on revenue. And so revenue has been an issue for the market this quarter from a percentage beat perspective, from an overall beat against expectation perspective. EPS, not so much, but revenue certainly has. the question on Nvidia's revenue was, are they going to come in at 24.5? Are they going to come in at 25? Or are they going to sniff the upper end above 26 billion? And just to remind everybody, revenue last year was 6.5 billion, and we're talking about this year being 26.04 billion. They drilled the 26 number. That is an extremely impressive revenue beat with an expectation right around 24.5. That equated to a 262% increase in revenue year over year on a $2.6 trillion company. That is unheard of for that size of company to have that degree of growth metrics to it. That is not something we have seen in modern market history, and it is not slowing down yet. They also increased forward-looking guidance based about 100% for the next quarter, which is out of this world as well. So you got a hat trick upon a hat trick here. They weren't done. Net profit increased 628%. Data center profit, which drives their GPU units for their AI conversation, drove up 427%. They weren't done. They announced a 1% increase, a 1 cent increase on their company. Nvidia is not only focusing on the growth, they're focusing on rewarding investors. Once again, for a growth company like Nvidia, that is relatively unheard of. To grow up and reward your investors to that degree is not typically something we see. Hats off to Nvidia for that. They weren't done. They announced a 10-to-1 split as well.
I feel like you're an infomercial right now. But
Listen,
wait, there's more.
What do you want me to say? What do you want me to say? This is what Nvidia produced yesterday, and it's extremely important for our community to understand these types of growth numbers. And again, I've been on this AI freight train for about a year now, and I encourage everybody to start getting in line with that AI conversation as well. It was a standout quarter. It's been a standout 2 years for Nvidia, and I don't see Nvidia slowing down. Now, the ultimate question is what next on Nvidia? For the investors, they're celebrating, popping champagne, and probably alleviating a little bit of pulling off a little bit off the top of the table here. That's probably the investors. For the trader in me, get this on a watch list and get it on a secondary pattern, because the last time we saw a multiple time frame breakout on Nvidia, we went up about 100%. Not saying it's going to do that this time, but it looks pretty good on Nvidia. Tomorrow, for the newsletter tomorrow community, I'm going to be writing about Nvidia's earnings report, obviously, but I'm also going to be writing about the halo effect that Nvidia has in general on the downstream impact in technology and some sub industries outside of technology as well. And so I'm going to write about that tomorrow, about the halo effect. So get excited about that, Team Tackle, because you're going to understand a lot more about this conversation on Nvidia. Nvidia was a standout upon a standout today. I do not have the proper words to describe how good of a report this was, because the expectation here, and again, my opinion is not just solely based on the raw numbers. It is based on everybody in the entire world that understands any aspect of the financial condition was focused on Nvidia's report. And to man, woman, child, everybody has the same take here. Positive impact on Nvidia, celebration type revenue, and it's what the doctor ordered. It's got broad shoulders. It's going to carry some in the tech space. We had an open question yesterday regarding the tech trade. Is the tech trade back? And what I mean by that is the tech trade kind of lost its shine this year as we started having more of a cyclical conversation. But in the last month, and let's go to FinViz here to look at the numbers here. I will write about this in sector roundup tomorrow, or sector rankings in the newsletter as well. But when you're looking at the groups here, and we see, okay, technology obviously doing absolutely fantastic today. In the last week, tech's doing absolutely fantastic. In the last month, tech is absolutely destroying. Tech got the upgrade last week. Tech's going to get another upgrade this week. It will be the #1 rated sector at Tackle Trading. And that's been a while since technology's been the #1 rated sector. It's had a lot of stiff competition out of the cyclical areas of the market. But the tech trade looks back, and Nvidia does look like to be a catalyst to continue to propel the tech trade. The only question you really have is waiting on proper pattern development here, because you obviously are overextended right now.
Yeah, I know those secondary patterns are going to be, I mean, we're going to talk about them in our pro community nonstop when they occur. We'll be on the lookout for them.
We're hunting.
50. Listen, this is why you read this tackle trading newsletter. Aside from the fact that it won't put you in the 55%,
No, it won't.
whatever you want to
You'll
call
definitely
that.
be staying at a Holiday Inn after you read that newsletter.
Yeah, like listen, I'll complain about inflation and this and that. We're not in a recession. That's not the thing. But aside from not putting you in that, I mean, it just gives you context and understanding. It's a world-class newsletter. It is worth the price of admission, and you'll stay around because we got some awesome people, awesome education. That newsletter alone is worth the price of admission for a pro membership. Matt, let's wander around some of the other indices right now. S&P 500 in a high base. One of the questions I had is, all right, we've gone through inflation, we got through unemployment, we got through Fed, we got through Nvda, we got through earnings. What's next, right? You highlighted the tech trade. You'll talk about that in the sector. But how will other areas of the market, different sectors, small caps, how will their charts look outside of the tech trade? I think we're all going to be focused on tech secondary setups. Go ahead.
For me, I mean, what's next is just technical analysis. It's just the navigation of the technical conditions. I don't really see a major catalyst coming out in the near term. You're through a lot of your major economic reports. Obviously, we'll start to get labor market numbers in a week and a half, but no, I think you're just navigating this technically, quite frankly. And so when you are looking at the sectors, technology is slightly overextended, but you're certainly looking at secondary patterns. And if you have a good trend, good pattern within the technology space, you're certainly taking it. Energy here, and I'm just going to kind of go up from performance here today. Energy got smoked 2 days ago and yesterday, and really needs to take a moment to get this pattern dialed in. I would actually like this pattern more than the break of the symmetrical triangle. If you hold at 92 and you come back up into 95,
Agreed.
and 95 breakout, I think that would be a much better technical pattern in terms of short-term reversal type situations than a symmetrical triangle break. And so a little bit of a fake out type situation earlier in the week. But again, if you hold here at 92, work back up, I think that's a better foundation. It's kind of like you're building a house. You got a house of cards, or do you want a nice little cement structure in that reversal analysis? That's what a double bottom does. It gives you a nice little foundation to start building upon. And so keep an eye on energy. It's not like fresh in mind right now going into later on today or tomorrow, but keep an eye here, because if you do hold 92 and you work back up, that looks really good. Finance pulling back a little bit, but again, alleviating some overextended conversations. I don't think that's necessarily a negative thing. We did give up the 9 yesterday, but again, a little bit of a pullback would not be the worst thing here to alleviate some of the overextended situations. Consumer staples, very similar to finance, just alleviating a little bit of that overextended conversation. Communications, getting a multiple time frame situation dialed in. I'd keep an eye on communications for any breakout type situation. Basic materials, talked about this just a couple of days ago, talked about how it's kind of lagging behind the rest of the cyclical areas. And yesterday I gave a compelling argument that gold is going to be slowing down here. And so BMAT's kind of a little bit off the radar. It looks like in general, a little bit more write those cover calls to get that cash flow work in there. Healthcare here, cleaning up as a high base, but it does have overhead at 148. So any trigger above that high base does have overhead at 148. So that's off the radar for me. Utilities, a little bit of a pullback, gap down situation. First time we broke that 9 EMA in a while. Didn't rival the 40 days and 40 nights above that 9 EMA on crude oil. That one time we caught that, but it was very impressive. But then again, when you see that 9 give up, that high base is now violated. You pull it into retracement analysis. So you do put a little bit of cold water on that one. Industrial here, I think looks really good, but I also think it looks really good on a breakout. And so keep an eye on that breakout. If there's
that's a classic breakout or meet me at a lower price pattern.
Well, again, lower price would have to be much lower than even.
Yeah, it is like one of the I don't have to even worry about that until one of the two occur.
Agreed. But for me, like, meet you at the lower price is 14 different patterns down the road. This is a high base going into multiple time frame. I'm not thinking down here. I'm thinking on a breakout perspective, and keep an eye on that 126. When you're looking at discretionary, I think discretionary is just, it's off the radar right now. And it's been off the radar for a while. Now, we do have one of those companies. We already talked about Nvda, another company reporting earnings in the consumer discretionary space that is bucking a little bit of the trend.
I got to share something last night. So I call Matt, what's your take on the video earnings of that? And then he starts talking about ELF. And Matt's like,
now, mind you, ELF was down.
And ELF was down after hours. And my brother said, if this stock gaps down, I swear I'm going to just say go buy it, because this was a fantastic earnings report.
I thought we were going to get a gift.
He was all fired up.
Mark calls me up right when ELF reports, and ELF's down like in the first 15, 20 minutes. It's down pretty healthy.
And Matt was pissed off. He was legitimately upset.
I was not mad. I was dumbfounded at some of the decisions that investors make along the way. I was not mad because I saw it as a gift. And so
now you're mad because now you're
now I'm mad, yes, because I was going to get the 200-day moving average market order. I was going to get that. That's what I was going to get. And now we got in an overextended situation. And so, yeah, when I read their earnings report and Alpha's down, I saw people trying to initially write ELF is just the latest company in the beauty areas to show contraction. And I'm reading their report going, what are you talking about? What are we doing here? The exact opposite.
This is a 55-point move.
Well, it's because it's the exact opposite of what the initial take was, that this is just a contraction. No, this is bucking the contraction that is happening in other beauty companies. This is the unicorn of the other beauty companies that are going through general contraction right now. Ulta Beauty, general contraction. ELF Beauty, I'm sorry, I'm not going to say general contraction when you beat the EPS handle by 65%, which is what ELF Beauty did. I'm not going to say ELF Beauty is going through general contraction when they beat the revenue. 291 was the expectation. That came in at 321, a 10% beat on the revenue side, which is really, really good in this quarter. And revenue was up 71% year over year. And so sometimes people just have pre-programmed ideas of what they're going to basically write about. And then when they get the price action, it's like, oh, well, I just find it such lazy analysis, honestly. Oh, price went down. They don't even read the earnings report. They don't read the context. The price goes down and they're like, oh man, price went down. Well, Ulta Beauty was down, so ELF must be going through the exact same thing. Read the report, ladies and gentlemen. No, they are not. 65% beat on EPS, 10% beat on revenue. Revenue up 71% year over year. Now, what drove the downward movement in price initially was a little bit of concern on their guidance. And their guidance was slightly dropped for 24. That got cleaned up very quickly when the CEO came out and said, guys, our guidance is extremely conservative. And once that issue was resolved, you got the response you were probably going to get on the raw number beat. This is a good report out of ELF Beauty. Instead of the 200-day moving average test that we probably were going to get if that guidance report didn't get cleaned up. Now you're talking about a breakout of 180. And that
high base here, allow moving average to catch up like Apple did.
Would love a secondary consolidation.
Like insert the Apple chart here and ask for that, right? Like where you gapped up, held, and then you made the move. That would be totally playable.
Different, but yeah, similar. Some differences, some similarities. I do like to call out though, a little bit of a gap up, hold the pattern here, and then you move up, upward, moving in price. You got a little bit more momentum on the gap because on Apple's gap, you gapped out and sold down to the 200. So it was a little bit of that pullback, get ready for the retracement. Whereas, and we did put that one on the report, but on ELF, it would be more of a momentum based type situation where you gap up, and where do you gap up into? You gap up into a known resistance level. It's an old pivot point right around 190. The pivot point's like, that's a bad line, quite frankly. The pivot point's like right here. The zone's from like 193 to 188. That's kind of the zone of that old pivot point. Any development underneath that right there would be really, really, really compelling. And so keep an eye on ELF. I think it needs to get on the radar, because discretionary is not my cup of tea right now, and it certainly looks at a downgrade. But ELF Beauty does look like it's bucking that slowing growth trend.
Hey,
out
Matt,
there.
this just in: 55% of Americans think ELF Beauty is a Will Ferrell sequel. So
They probably would, actually. That they probably would. You know who wouldn't know that? My daughter, who loves ELF Beauty, like loves. In fact, I'm probably going to be at a Walmart near you today with my daughter buying
you
ELF
should. I
Beauty.
mean, serious. I wish we would record the conversation. Matt and I were both talking about how ELF Beauty, yes, consumer might be struggling. ELF Beauty offers low price products that fit this environment. We were like, we talked more about ELF Beauty than Nvidia.
I
Nvidia,
love this company.
because Nvidia's earnings were like, oh yeah, this smash everywhere. Like, wasn't a lot of analysis.
Let's just geek out on the beauty of Nvidia. The ELF had some context to it that was important to understand. Nvidia's, I think the importance on Nvidia is understanding the downstream impact, and that I am going to write about in detail tomorrow in the newsletter. So I'll save that conversation for there. ELF here, I think you can get something dialed in pretty quickly there. So keep an eye on ELF. There's no doubt about that. All right, moving on. Let's stay in earnings, though. SNPS Synopsys also reported earnings, and they came in as a positive $3. The expectation was $3.05, so a slight miss on EPS. They also slightly missed on the revenue side. So why is Synopsys going up despite a slight miss on the EPS and a slight miss on the revenue, where revenue did go up 4% year over year? Mark, their guidance was very mixed and difficult to understand. In general, what they're doing here, and I think what the important thing is, if Synopsys is your thing, and it is a multiple time frame breakout scenario here, is they basically are disincluding their software integrity business, and so they're basically removing that from the equation. And the market is celebrating the reduction of one of Synopsys segments, the software integrity business. I'm not sure what the software integrity business did, but apparently Synopsys didn't either, so they're canceling it. That's having a positive impact. I'm not as familiar with Synopsys as I am.
I like those previous two, like the removal of something. The other two, Nvidia ELF seemed a lot better. Like,
yeah, and again, this is a good breakout situation on Synopsys with the $600 conversation. So I don't want to throw cold water on it, but yeah, if I had to, I'd put Nvidia on the secondary watch list. There's no doubt about that. All right, moving on. We got Snowflake reporting earnings here today as well. We'll get into commodity corner here in a second, because we certainly got things to update in the commodity space, ladies and gentlemen. But since I was already kind of in the
we just listen, I lost control as the host about 12 minutes ago. And it just is, it's chaos. Now. It's anarchy right now.
But well, it's not that much anarchy in Snowflake here, as they come in at 14 cents versus 19 cents. That's a miss on the EPS. Revenue did top, so and revenue did go up 33% year over year. They reaffirmed forward-looking guidance. Tough look on their earnings release with the volatility we're seeing on the gap out and the sell down. In general, Snowflake, I felt, when you look at some of the secondary numbers out of Snowflake, I think you can have some context around their EPS miss. Mm-hmm. To me, it really doesn't matter. To me, this is a technical conversation. And if Snowflake is your thing, Snowflake's an AI name within the financial space as well. But if Snowflake's your thing, I do think you're coming from a nice little support level. You have some overhead right around the 172 level. You spend a little bit more time in this consolidation underneath that green line. I think you can dial in a nice little 172 reversal here on Snowflake. So keep an eye on that one. I want to touch it underneath that 200-day moving average. There's a lot of price action here that it's difficult to anchor against anything, honestly. But keep an eye on that. There's a lot of foundation support between 140 and 150, and you got multiple time frame resistance right about north of 170. So keep an eye on any potential reversal coming out of Snowflake. And then the last stock in the news here today, Chucky, there is quite a bit of news today in general, but the last stock I want to talk about specifically in stocks in the news is Live Nation, LYV, not LYN. As Live Nation's in the news for one reason and one reason alone, the United States government, through the United States Department of Justice, is filing an antitrust lawsuit that is joined by 30 states out there that suggests that Live Nation has a monopoly status within large major venue concerts, and they control 80% of all tickets that are sold on large venue concerts. And so they're filing an antitrust lawsuit against Live Nation. Not a good look for Live Nation. The government's got they got a case, and they're going to prosecute it.
Yeah, no, I mean this story has been in the backdrop of Live Nation for a while now, and it rearing its head today. So
not a concert goer, so I don't have an opinion on that. I do have an opinion on monopoly status. It's the one thing that I think if there's one thing that most people in 1776 through 1798 would agree upon, it's that we should not allow monopolies in America. And that's been common throughout American history. So, yeah, I think we need some competition.
There's a lot of commonality there. There's a real debate on monopolies, though, on whether you put the cash in the middle of the board game. There is. This is a very, some people
believe. It depends what the fine is about.
Like some people believe you should.
Somebody just fining on one of the cards. Yeah, you put it in the middle. Are you talking about it on the board? You put it in the middle. Got to have a reward for landing on free parking, bro.
One of our sister-in-laws got mad at Matt and I once because Matt and I were cheating in cahoots together on Monopoly.
Cheating is a strong word, I would say.
We were literally giving each other money out of the bank. That is cheating.
Who hasn't done that in Monopoly?
And we were having fun. We were trying to get in.
We were just kidding,
she did not appreciate the humor behind.
Neither did she. She not only didn't appreciate it, she has not played Monopoly with us ever since that moment. And that
never, not once, never once. Let's go to Forex.
It was
Factory.
A joke.
It was a joke. We were having fun. She did not find it funny.
No, she didn't find it funny that we could pull out cash for Boardwalk whenever we wanted. No, she didn't. She didn't. All right, we'll see if Live Nation can buck that.
All right, let's go to Forex Factory. We had a little bit of a data dump today on the economic. This was going to be the busiest morning of the week, the busiest day of the week, because the most important data came out today, unemployment claims, which came out weekly, plus the PMI numbers, pretty red hot this morning, man. That's weighing on yields. And caused a little jolt to the market.
Honestly, I think that's the reason why the market hesitated on the breakout is you had an algorithm response.
Because good news is bad news.
Like literally, 1, you got your high base against the all-time. 2, you got your Nvda breakout on amazing earnings. 3, market sold off on an algorithm response to positive economic data. I could understand why 55% of the United States population doesn't understand how this works sometimes, because it can be complicated. But when you're going through a yield conversation, that does typically take priority number 1, at least in regards to algorithm responses. And so I do think we had a little bit of good news is bad news today from an economic response perspective, because as the positive economic data came in, you saw the market go down, you saw yields go up and the dollar go up. Mm-hmm. And that is the 1-2 punch you see on.
Yeah, I mean, the thing is, we're in a good news is bad news is good news environment. Now, eventually that will change, but that's where we're in right now.
Yields, yeah. Or
and had those numbers missed this morning, you would be up probably.
I think we're up a 1.5. I think we're up. I think we're up 1.5 without the algo response to the positive news today.
Yeah, no, absolutely. And so that sets
Which
the
means I
stage.
also
And
think this gets cleaned up.
yeah, I do too. And we'll talk about it in the newsletter this week. You know, a big report coming up is the inflationary report next Friday. Market closed on Monday as as Memorial Day is upon us. You know, but not a lot in between now and then. Good time to get cleaned up and set up for that
Yeah.
that next event. Not a
Well, it's
lot in between now and then, though, Matt.
no, there's not. You get some preliminary GDP numbers. You get the consumer confidence numbers, and if there's anything that does tell us today on the algo responses, you can always get a little bit of volatility, but no, it was just a little bit of volatility here today. It wasn't too drastic, I would say. Pretty clean environment going into the PCE report next week, and again, for me, the PCE report is the number one report for the Fed, but I would say it's the third most important report for specifically the inflationary data. I would say the CPI report number one. I'd say the average hourly earnings within the labor market numbers number two, and I would say PCE number three, and then I would say PPI number four.
Yeah, and I'm looking forward to the Treasury currency report where they will let everyone know that they're printing money.
Isn't it
So
amazing how the central bank can sit there and be like, oh man, we're in restrictive territory. We're really inflationary fighters. We got the t-shirts. We're fighting inflation. We're talking about how we have it in restrictive territory. You're not restricting hardly anything right
yeah,
now. Let's be honest on that conversation. That's number one. Number two, when it comes to your battle against inflation, central bank, the interest rate component is just one piece of the puzzle. And where you can go to the 55% of the population that doesn't even understand what's happening in the market and tell them you're fighting inflation. To the rest of us who do understand what's happening in the market, we know you have multiple tools to combat inflation. And whereas one of them is in restrictive territory, you've opened up the floodgates of everything else in the other ones. And so I'm not going to have let's just say there's no positive vibes coming from me towards the central bank in any degree in the future. So
well, that is a
I think
shocker.
they're making massive mistakes on monetary policy.
Let's go to a couple commodity charts before we wrap up our show. Let's spend a minute on gold. Yesterday you talked and said tops in essentially. You know, was like
In the
the
short term.
in the short term. Yes,
Yeah,
not all. Yes, this thing is much higher one day.
I think we hold either at the 50 here. We can pivot at any point, honestly, but I think we either hold either at an elevated level or 2,300, but I wouldn't be too concerned unless we breach 2,300. And unless that happens, I'm not going to be too concerned. 2,300
no,
would give up the 9 EMA on the weekly chart. It would give up your pivot point. And so I think it's covered if you got them, and just be patient here until we get better analysis coming from that support build. But in general, yes, I do think gold is going to take a moment here. I do think the next trade or the next pickup from a technical perspective is either through a reversal, short-term reversal against 2,300, which I would not love, or to reform up and couple handle this at 2,450. Until that happens, I think we're talking a little bit of cash flow situations on the gold side of the equation. Now, GDX, Mark, does not necessarily mean it's going to just go cash flow here. Because on GDX, remember, GDX can play catch up against what gold has been doing for a very, very long time. This trend in GDX has only been going on for about 3 months now. And so the trends in gold, oh man, that's been going on for how long? Let's go to the weekly charts. So that's kind of going on from that point there, but you got a point there. So I would say, I don't know, since last September, this current trend. And when you look at where GDX is, it's all the way back down here. So GDX certainly could play a little bit of catch up versus what gold is doing. And if you are looking at GDX, would love nothing more than a pivot point at 35. Give us that pivot point at 35. That's the corrective retracement. Underneath 35, I don't think you're looking on the directional side. I think you'd probably just look on the cash flow side. A pivot point right here at this 35 number would look really, really good. Technically, you got your old resistance here at 35. 36 is the multiple time frame situation, but 35 here, you pivot point there, you hold that 20-period moving average, you get some confirmation. That looks good on the directional side. So I do think gold's going to get a downgrade. You're going to be a little bit cautious on GDX because of it, but I do think a pivot here is playable. And so pivot and go. Let's see what you have in GDX. I also think you're looking at a go or don't situation in GDX as well. And for the pros that tackle trading, they know that's kind of that last step in the retracement analysis where we got there pretty quickly on GDX in the last 2 days. That last step in the retracement where you're no longer looking at a directional trade. And so I do have it as a go or don't, because I do think if you want this trend to stay intact, I do think holding 35 is going to be important in terms of the cleanliness of GDX specifically. Now, when you're looking at silver here, /SI, silver here obviously has a little bit more momentum in the short term than gold does. We have a little bit more of a directional lean on silver right now than we do on gold from a pure directional perspective. And whereas gold is kind of clinging on to some degree of cup and handle continuation analysis, this is a momentum trend at a momentum 9 EMA. And everybody that's a pro of tackle trading knows exactly what we need to see here. And if you do not know exactly what we need to see here, you need to come over and become a pro member of tackle trading, get in the option success training, which is going to be on June 3rd and 4th, and learn how to read these charts, because you give us a pivot here. You got momentum trend with a momentum pattern. The only thing you're missing is pivot and confirmation. And that looks really, really, really good. And so silver here, SLV, looks very similar to what we look at on the futures instrument itself. And so when I'm in the halftime report, I do like to break down the futures from a technical perspective. That is my go-to, is the futures from a technical perspective. But you got very similar analysis, obviously, on your ETFs, momentum and trend, alleviating a little bit of that overextended situation. Now you're coming into a rising 9, pivot and go. Silver looks pretty good.
Yeah, no, I mean, there's a lot, both of these charts are very, man, the next candle really changes the story or type situation, right? Like, sometimes you're in a pattern and the next candle is like, yeah, well, unless it's dramatic, the next few candles can really, really matter, right, in the development.
Well, Travis makes a great point in the chat when he says, let's see if that old resistance at 30 can act as new support. The principle of polarity playing out in front of our eyes. That's a very important principle that Travis points to, because what it does is it gives you confidence in your support level. You don't know if 30 is going to act as a support. You don't know if the 9 EMA is going to act as a support. What you know is the 9 EMA has acted as support and 30 has acted as a resistance level. That's what you know. And so what you want to see is you want to get that confirmation that now support, that old resistance level can be officially treated as a new support level. And that's what the principle of polarity is all about. Understanding how old pivots become new pivots, old resistance becomes new support, old support becomes new resistance. And so that's what Travis's comment is going to, is that old resistance level at 30, which is a massively important multiple time frame number. And I put 30 into the new 20. Like, I put 20 and 30 into the same category from a significant whole number. And I don't just say that lightly. I've been doing that for literally years and years and years, is treating 30 very similar to the way we have historically treated 20. Both very important, significant psychological whole numbers. And so 30 here could be a really important support level on silver. You're definitely looking at silver for pivot action here. You want to, and when you're looking at pivots, the creation of a pivot goes from, it's a three bar pattern, basically a 3 candlestick pattern, where you have the preceding candle that comes down and hits support. That's called the preceding candle. Then you get the next candle over, which is typically some degree of slowing momentum candle, inside bar action, that signals that the market is slowing down the selling behavior. And then you get that upward movement in price, which is called the confirmation candle. The analysis of understanding those three candles and how they create pivots is really what you're looking at here. And once again, that's just a pure technical conversation. So again, I'll just say the same thing I always do. If you want to learn technical analysis, come learn from me. I teach it in the option success training.
Yeah, teaching the option success training. Talk about it in the newsletter. Yeah, let's go to oil real quick. OPEC meets coming up. They might have something to say about this pattern. But for now, the impressive look has turned sour really quick, hasn't it?
Well, we're getting our last leg. And again, the 2 wicks notwithstanding, you had good development at the 200-day moving average. My philosophy here was patience plays, wait on better analysis, wait on better conditions. And in terms of crude oil, you know, you could have had that breakout of 80. I didn't think that was going to be a great breakout, honestly. You do have overhead, so you'd have to wait till 82 on that one to get excited about it. But you work down a little bit here. I said, I believe I said on Monday that you could still get a leg here. You can still get a leg. You're just going through some degree of neutral formations at the 200. You got to be ready on either side of the aisle when you're talking about neutrality at the 200-day moving average. And it does look like it's getting resulted to the downside. But I don't know how far you can go to the downside before you start running into major support levels. And it starts with the 200 weekly.
It's literally right there, right?
It's a stone throw. It's one day.
And you don't have to be a great historian. All you have to do is look back in the last 9 months.
You got to have it. You don't even have to have 2 eyes. You just need 1 eye.
You just need 1 eye to see how that 200 weekly has been a battle zone.
That's a 1 eye analysis. It doesn't take,
you know, like it's been a battle zone. And here we come again. You know, oops, I did it again.
There you go. You got Brittany on your mind there, buddy. I like the 200-day moving average. I think it's going to take a little bit of time to get dialed in, but you work that looks pretty good, honestly.
Yeah, and on the flip side, if you do not hold that, well, there's not a lot down till about 68 or 69 or so in that range. So big battle zone.
Yeah, but I don't know. That 200 weekly's got a rich history.
It's got like you're not shorting into that.
Rich history is wick test underneath, by the way. One thing we're going to be laser focused on is if we get
that's a great observation and true.
A daily test underneath the 200 that
means
gets
nothing
back up is what you're looking for there. So I just think we're going to wait on that 200-day moving average pattern to emerge there. I think we got a little bit of time here on the energy side and the crude oil side.
Yeah, and let's close out our show. Maybe we should talk Bitcoin last, so we go to church. The last thing we do in a reverent little mood. What do you make here? Right, a little bit of weakness, come back.
Market showing a little weakness here today. I mean,
yeah,
nothing.
Cool.
Do you make anything of it?
Nope. It's no, Bitcoin. That choppy's like no.
I don't make anything of anything when you're in a trade and you have a down day, but you haven't even breached the 9 EMA and it really hasn't changed the pattern yet. Like you got to be able to discount certain days that aren't really anything yet. But can it be something? Certainly, if it breaks 38, but that's why you have a stop loss underneath 38.
Yep, absolutely. Listen, always enjoy doing any content with you. Looking forward to the podcast this weekend. I have my Cash Flow Vikings Trading Lab tonight, 7 p.m. Eastern. Gino will be teaching the Cash Flow Club. And wish him an early happy birthday. Birthday is tomorrow.
It's birthday tomorrow. Coach Gino's
birthday tomorrow.
Tackle. Let's make sure he knows all about
give him some love. Like, you know, Gino loves his cash flow. He loves y'all.
I'll tell you what, he loves teaching Cash Flow Club. He loves teaching his Cash Flow Vikings. He had a fantastic Vikings lab
No,
yesterday.
I mean, no, that's you mean the
Loves that
Phoenix. Don't
creative.
get your Viking lab
Excuse me,
crossover.
Phoenix. I'm sorry. I'm sorry
You
to
know,
offend you, Vikings. There, can I just yell skull at you guys? And
yeah, that
okay,
usually
skull.
solves the whole
But
issue.
Gino is a fantastic educator, and if there's one thing I know about old Coach Gino, he cares about this community as much as anything. He will do whatever he can to help people out along the way. And his specialty is on the creative option strategy perspective. And quite frankly, if you're looking for creative option strategies, there's nobody better than Coach Gino at creative option strategies. He is the best at it. If you're looking to maximize your theta, he is fantastic at maximizing theta. It's been his emphasis for over 20 years in the market. It's cash flow, creative option strategies, pounding that theta. And I'm so impressed with what he does. And I just want to take a moment to wish him, and it is tomorrow, but take a moment to wish him an absolutely amazing birthday, because he deserves it, and he's an amazing individual, and we're very, very fortunate to have Gino in our community.
Listen to that, Gino. We're just lavishing you with love. That's a good birthday gift. That's a good birthday gift.
Plus, he always keeps it light, and that's what I love about Gino.
Gino's consistent.
He always keeps it light. He's a great guy. He's a great guy. All right, send us out there, brother.
Well, listen, everyone, check out those shows if you are members. Listen, we'll newsletter. We'll be hard at work at it. Starting tomorrow. Have it out at the latest Saturday morning. Have the podcast out this weekend. Our weekends, we bring it. We bring it. And that newsletter is reason to sign up for that little thing right there. 15-day free trial. It will just keep you on top of the markets. It just will. Matt, you've done a great job, ramping up, improving the quality there. And it's amazing. It is just.
I'm rather enjoying writing the newsletter.
No,
honestly.
listen, he enjoys it Thursday at 11:22 Mountain Standard Time.
Friday at 11.
Friday in the afternoon, he's a grumpy bear as he's deep in analysis and work and all that. So
I want to make sure our community has the best information they need to execute their system.
You will punctuate that sentence
every single day. That's my goal. That is my goal, is to give our community the information and ammunition they need to execute their systems and their strategies on a week in, week out basis. And I love doing it. So it is a labor of love sometimes on a Friday afternoon, Friday night, but I truly do enjoy putting it together. And I like putting my analysis in the written word instead of just here on YouTube, so that, our community can parse that as they need on their own time as well. So definitely check out that newsletter. And it is a good one, ladies and gentlemen. It will keep you in touch with every aspect of the market on a week in, week out basis. I put my personal analysis into that. We put our rankings for tackle trading from a sector perspective. It's chock full of great information. And so and obviously available to all pro members. So if you're not a pro member, 15-day free trial on us. You can test out the newsletter this weekend. You can test out the traders report this weekend. You can sign up for the June 3rd and 4th option success training, all for free. Not going to get a better value in the market, I can promise you that. So with that said, everybody have a wonderful, wonderful rest of your day, and enjoy Team Skull. Enjoy Team Vikings later on today if you're in that lab. And then for the pros, you got Coach Gino on the Cash Flow Club later on tonight. Let's make sure to wish him a happy birthday tonight.
Everyone, have a fantastic Thursday, everyone.
Later, team.